Good afternoon, everybody. Today's Friday, the 29th of July, 2011. Let's take a look at this market. It was the last day of July, so July is going to go down as a pretty negative month here. Actually, the Nasdaq finished up for the month, so I guess you could probably call it more of a mixed market for the month. However, this week, obviously, we had some painful experiences for those who have remained long into this decline here. The S&P 500, as we know, the big level that we had taken out about a month ago that led to the rally was this 130 area. We came down and tested that 130 and got a bounce last week. However, today, of course, that level failed. If we remember also, if we take a look at some Fibonacci here and we take a look at the lows from June to those recent highs, that was also the 2/3 retracement level. In other words, from this low to the July high, the market had come down to the 2/3 retracement level, and that's where it had bounced, and that was that 130 level, which of course failed in here today. We had the gap lower, the market rallied up to 130, and this prior level of support is now turned back to resistance as it was back in late June. So the market remains tedious, I guess you could maybe call it, as it's been really for this year been more range bound than anything, but with a lot of volatility. And today, of course, what we were talking about yesterday on Twitter was that the market was looking like it would lose that 130 level, and I thought that maybe over the course of the next week or so we would come down and test the 200-day moving average. However, we did get a test of that today, and that's where we bounced from and closed above it for now as well. Again, back to this weekly chart, this chart where we have a 50, 100, a 150, and 200 day. When we see the 50 and the 100, 50 and the 150-day moving average crossing, so in other words, the 50 is below the 100, the 50 is below the 200, and that 50-day moving average has actually got a slight downslope to it, that it indicates on the longer-term time frame more of a neutral environment, which we can pretty much see as we, by looking at it just by drawing a couple lines straight across, that we have been in a volatile environment. And now you could even look at this. We were looking at and there was a good question about it, isn't an inverted head and shoulders pattern usually formed at a bottom? Usually yes, but sometimes they're a continuation pattern as well. So we were looking at this as a potential level that if the market cleared that neckline and this resistance that is seen at that 135.80 area, that it could lead to another leg higher, that we didn't want to rule that out. However, now we're looking at this, and this inverted head and shoulders pattern has completely failed. Similar to what we were talking about as a warning at the beginning of the week, was that the Russell 2000 that had that same inverted head and shoulders pattern setting up, the Russell 2000 failed out of there earlier in the week, and that was what, if you recall, on Monday and Wednesday I was talking about, was a little bit of more reason for concern. I also had pointed out what was I going to say? Oh, how the semiconductors had created, come down to and through that low and bounced that first time. And yesterday I said I don't think the next time is likely to bounce, because what we've seen in here is that the sellers have been more persistent. They've been more persistent in terms of time. That it was first about 3 months for it to test that 32 level. After March, we tested it in June, so it took 3 months. The market bounced very strong from there up to a declining 50-day moving average and closed above it and got some people excited. But this is why when we have a declining 50-day moving average, we're very suspicious of rallies, especially when they get extended like this one did. So the market failed from there, came back down, created a slightly lower low, and that only took about 3.5 weeks. So instead of 3 months, we had 3.5 weeks. And then we had another bounce. And what happened there was the 50-day moving average created a barrier there. The declining 50-day moving average, the market couldn't get up through. So we had, what did we have? We had the sellers being more persistent through time. Instead of 3 months, 3 weeks, and then a week and a half later it came down to this level again. So time wise they became more persistent, more aggressive. Price wise they're becoming more persistent, more aggressive. In other words, the first move from 32 brought a bounce up to highs, then it came down to 32, bounced only to 35, and the seller said, that's good enough, I'll take 35 for this. And it came down, bounced back up, and sellers instead took control at that $34 level. And 34 was the next lower high, where we now have that where we now have the most relevant lower high. The market's going to need to at least get back up through that level and have that 50-day moving average for this market to have any kind of bullish rally that would last more than, I think a week or two here. So we have to look at this and say, the semiconductors are clearly broken. The S&P 500, it's not broken, but it's getting to be, we've got this bigger level down at 126 really. And this level, if we keep testing it in the same way, that is, we come down and hit on it and bounce again, and this time we get a bounce maybe up to 130. So maybe we're going to continue lower next week into the lows for the year that we've seen, and then bounce up to 130. And if we create a lower high in there, that could be where this 200-day moving average fails to continue to hold as support, and instead we find resistance from underneath, and then this market begins what could be a bigger, deeper sell-off. Now, we've got that trend line from the lows of 2009, and very similar to what we were just talking about in the other markets is, the more times that a trend line or any level of support is tested, the more likely it is to fail. And I think that, this 125, we're not there yet, obviously, but 125, breaking through that is going to be a difficult event for this market if that happens. It is on, Chief. Is anyone not having an issue? Are people hearing me? Because, Chief, maybe you need to do your refresh the screen or something, but no one's told me that it's not working, since Sean says it isn't. It is working, so that's something on your end, Chief. So anyways, let's take a look back to this S&P 500. We've got the intersection really of that trend line and this level of support, so it remains very dangerous. Now the Russell 2000 we've been talking about, as far as from that failed move higher, from that breakout to all-time highs just back in May, we've seen this market sell off, and it sold off very quickly back there from that high level. Now we've got the Nasdaq that made a 10-year high this week, and it's failing in a similar way. We've got an important level down at 57. So the Nasdaq, like I said, is still up for the month. So it's done much better than some of the other markets, and you can look at stocks like Apple, and obviously, which is so heavily weighted and just remains in a giant uptrend. Some people are still looking for a top in Apple. I think it's foolish to look for a top in a stock like this one, and it's Apple's below the declining 5-day moving average, so I think new purchases would have to wait for at least to get back above this, probably above 400 level. But we've been riding this 5-day moving average, which has been advancing through here, and now we're closing below it 3 or 4 days in a row. But you look at Amazon as well, another big stock that's very strong, having good results, but earnings, reactions to earnings, stocks like Cerner, IBM, some of these big names are close to these all-time highs. ISRG is another big medical technology stock that's broken multi-years resistance in here, and ISRG could be beginning a new uptrend in here, similar to other stocks like DEC, like Green Mountain Coffee Roasters. They come out with these big earnings numbers, and there are some stocks that are doing well. There's other stocks that remain in these horrible declines. Stock like Akamai. People have been asking me the whole way down, where do I buy Akamai? And I've been telling them consistently, we've got a declining 50-day moving average. Don't trust these rallies. And it continues to be terrible in there. It continues to be terrible in a stock like Juniper, which is getting smashed. And then you look at some of the stocks that have made recent recent all-time highs. Stocks like Cake, I think this was close to it. It might have been an all-time high here, but Cake, broke out to a high and then just slammed here. So there are stocks still holding up, but don't be complacent. Don't think that they're going to be immune to any profit taking. Take a look at stocks like Coventry Health today, which was at an all-time high, not an all-time high, but it was at a new high here just 2.5-3 weeks ago, and it's down, at this point, 15-18%. Fortinet has been a huge growth company just in this massive uptrend, and it was at an all-time high here 2.5 weeks ago at $29 a share. Here we are down 30% from there. ILMN, another stock. It was at an all-time high, just short of $80 a share, and now we lost 25% in this last month. IMAX was breaking out to all-time highs, and everything's going 3D and all that, but we're below a declining 50-day moving average. Things just continue to get worse in here for these markets, and when you look at stock or markets like the Russell 2000, the big level in here is going to be that $77 level. For the SPY, again, it's about 126 and a half. The Nasdaq, we've got a little more protection here at this 57 level. If we get down below 57 and if we get down below 57, then it would be then we'd start to have to really look at this Nasdaq and say, how are those big stocks holding up? Are they starting to break down with a little bit more frequency? I've got a question here from Jason, which says, why doesn't support get stronger with each test and bounce? Doesn't a trend with 5 tests have resilience more than 3? No, what you're having occur in there, let's go back to the semiconductors, is that the sellers are getting more persistent. Again, they're revealing that persistence to us because the sellers are showing up much quicker. They're coming down to this level. It took three months, then 3 weeks, then a week and a half. And also, when you have lower highs, it says that there's some maybe there's a long-term buyer. Let's just make up an example who needs to buy 1 million shares at this 32 level, and of course it's not going to be 1 million. I would say it's 10 million shares. So they buy 3 million shares there. They buy 3 million shares in here. They buy 3 million shares in here. So they've purchased 9 million of their 10 million shares. They buy their other million shares there, but the sellers keep coming. The sellers keep coming, and the demand at that level starts to dry up. And that's what support is. Support is an area where the buyers, come in and offset the supply, and that's what we have there. So the more times it's tested, the more likely it is that it's actually weakening it. Think of it as you're standing on a frozen pond and you're taking an axe and you're chopping away at it. The more times you chop the ice, it doesn't make the ice stronger. The ice is going to slowly give way, and you're going to fall in and get wet, or lose your money in the case of the market. So the markets, obviously, the financials, we're down here at these lows as well. Financials are they've always been a mess to me, but they're in a downtrend. You have to look at it and say, look at the 10, 20, 30, 40-week moving average. They're all declining. The 40-week moving average, maybe you could say, is flat, but we're below them all. This is what a bearish environment is for financial stocks. Is it going to continue down towards 13.5? It very well could. I don't see a reason why it wouldn't. But the semiconductors, same thing. The more times these levels are tested, and we can take a look at this longer term trend line, maybe that's what we're headed for, is that this if we break 30, that we head down. If we break 32, then we're going to head back down towards this level and maybe intersect with this trend line from the 2008, 2009 low. If we take a look at that trend line, the Russell 2000, we take a look at this longer term trend line as well. If we break this level in here at $77 a share, we would probably overshoot and come down to this trend line at 75-ish. So that's the way we have to look at this market. There's still, again, there's still stocks that are doing well when you look at some of those big names, but and these aren't necessarily the big names here when I mention Fortinet and that sort of thing. But the point is with Fortinet, with ILMN, with IMAX, that they love them one day, and that's the nature of momentum, and that's why defense is the strongest. Is what wins the game. You have to have that strong defense, because if you become complacent and if you let your winners run and just continue to run and don't ever harvest your profits when the market starts signaling lower highs and lower lows, you're going to get stuck in a position where you might have owned it at 30 and here it is a month and a half or 3 months later you're down at $19 a share, and that's not what keeps people in business. And staying in business during a difficult environment like we're in is something that a lot of people don't even do. They get worn out, they get frustrated, they get chopped up by small losses, or they allow big losses to occur. Either way, you have to, if you're serious about making money in the market and making this more than just something you dabble in on the side or making it a hobby. As they say, hobbies cost money. This shouldn't be something that costs you money. It's to make you money. So you have to play that strong defense and learn to be able to look at things objectively and say, that's it for now. Anyway, I had somebody, a subscriber wanted me to take a look at Boeing. And Boeing, I don't see anything special happening in Boeing. We've got a declining 50-day moving average. We're in this little channel lower. Perhaps we're coming into an area where we find some support, but Boeing just doesn't, it looks too heavy to lift off here, basically. So, thanks for tuning in, everybody. It's Friday afternoon, July 29th, and that is going to conclude it. Take a swing by alphatrends.net and sign up for a free 2-week trial if you want, or I'll talk to you again when it's free at some point next week. So thanks again, and have a great weekend.